A fair value gap or imbalance is formed when there is an inefficiency in the delivery of price, and it's a very powerful tool when it comes to trading. But I've come to observe that a whole lot of traders are limited in the usage of the fair value gap. So in this video, I'm going to take you a little bit advanced into the understanding of a fair value gap, and I'm going to be doing this using a live execution where I utilize this process clearly. Before we go into the video, I want you to watch the execution, then we proceed straight into what I was looking at.
Charge on the spring, hard on the king, not by sight. I move by what he brings. Early mornings I'm watching the charts, candles forming but I got my heart. Not every move is a move I take, I wait on God, not a quick escape. Liquidity calling traps in the skies, but I see deeper, I don't trace highs. Patience steady, my spirit aligned, he gave a vision, I follow the signs. Losses came but they didn't break me, every lesson ain't shake me. I don't trade just for the goal, I trade with purpose, truth be told. Directed by grace, I don't move alone. Every step I take, yeah, it's already known. From the highs to the drawdown phase, I give it all to you, I'm led always. Not my will or let yours be done. Even in trades, you're the only one. God, for your loss, I still give praise. My head in the margin, it is your grace. South, taking bites, I sweat, but I stay calm, no fear, no stress. Discipline strong, I stick to the plan, but I know the sauce ain't made by man. Back testing nitro, finding my sight. But revelation came in the quiet time, not your strategy is deeper than charge, it's shaping the trader inside my heart. When I almost quit, you said stand still. When I doubted me, you showed your will. Every entry, every way, you're the reason that I operate. Directed by grace, I don't move alone. Every step I take, yeah, it's already known. From the high to the drawdown phase, I give it all to you, I'm led always. Not my will, I let yours be done. Even in trades, you're the only one. Cry for your loss, I still give praise.
Alright, welcome back. As you already must have observed, that execution was taken on Monday, 4th of May 2026. Alright, here is the 9:30 opening price right here, and I'm on the 15-minute time frame. Before we go down to the lower time frame, I want to quickly show you what I was looking at and why I was expecting higher prices on this particular day. So I just want you to pay attention to the left side of the price. We want to see what price was doing prior to 9:30. So very fast, the first thing that would drag your attention is this sell side liquidity right here. You observe how we have this low here and how we have this low here. What we have here is called a relative equal low, and if you just look down lower, you see that we have this fair value gap just below it. We have price prior to 9:30 traded down, taking out this relative equal low in the form of sell side liquidity, and see where it traded to the consequent encroachment of this fair value gap. When you're looking at this swing from high here to the low here, how do you know price is not going to come to this low? Draw your attention to this fair value gap right here. You saw that after taking the sell side liquidity, it traded down to the consequent encroachment of this fair value gap, and it keeps trading lower. But if you observe something, you saw that the bodies of the candle never closed below the consequent encroachment of this fair value gap. You must have heard ICT say this, that the body tell the story while the wick they do the damage. So that's what we are saying here. Seeing that price is unable to even close below the consequent encroachment of this fair value gap prior to 9:30, rejecting it from here, coming to 9:30, seeing what we have here and the little internal structure that we have just right here, gives me the confidence that we might likely come for some buy side liquidity and eventually come for this buy side liquidity. That was my thought process. But let's just flip it over. Let's say price decides to come for this low. How do you want to see it deliver? It's very simple. You don't want this fair value gap to be respected like this. You want to see the bodies closing below the consequent encroachment of this fair value gap. You want to see the body fill it completely, start closing below the fair value gap completely, and then it will use it more like a resistance, like a ceiling, to come for this sell side liquidity. With this idea I just shared now, you can pick any reasonable range in the market and use that logic. Let's go back to what we are looking at. So we have this sell side liquidity here. Price took it out here, traded down into the consequent encroachment of this fair value gap. We saw the reaction from there. See the way it's using the upper portion of the fair value gap to keep pushing to the upside, and see the way the structure, internal structure, is shifting bullish right here. So pay attention to this little fair value gap here on the 15-minute time frame before we go down to the lower time frame. So I just want to draw this out. It's quite tiny but very, very important. It was something I was looking at on this particular day. So prior to 9:30, I think around 9 o'clock, we had this candle traded down, closed above it just like this. We have the 9:15 candle, close it. If you look at this low, what do we have here? We have a swing low. The moment we have price fill an inefficiency completely like this, we don't want to see that swing low get taken out. So at 9:30, even if we are to continue higher, the type of manipulation we want to see is not such that will come and start taking out this swing low. If it start taking out this swing low, then I might have to reconsider and then come do my analysis again and see if there's anything in price to look out for. And if there's nothing, I think on days like that, I'll just stay sideline and not do anything. So those were basically the things I was looking at. I wasn't expecting this low to be taken out. So on a normal day, you are looking for a manipulation to happen at 9:30 on the 15-minute time frame. You want the swing low to be taken out, but this particular swing low, which is the closest swing low to the left, is something that looks more like a protected low for me. And if you watch my last video, I think I explained that better. So this is an intermediary term low, and if price is to go higher for some buy side liquidity resting above here, then I don't want lows like this to be taken out. Now to the next phase, I want to draw your attention to this fair value gap here. Remember, the aim of this video is to show you how to use fair value gap more effectively. So I just need you to pay attention. So see the way I'm bringing all these confluences together. So as you continue interacting with price, it comes to a point where you just open your chart and you start seeing all these things. You start bringing them together. It's more like a story. So it has to flow. It has to agree. So we have these sell side imbalance, buy side inefficiency just right here. I already explained to you what was happening down here with this sell side liquidity and this fair value gap. So I want to draw attention to this CB now, sell side imbalance, buy side inefficiency. See the way price traded to the consequent encroachment. The body were just hanging below the consequent encroachment, but it traded lower into another fair value gap created here and pushed to the upside, started closing above the consequent encroachment. So you must have heard about the concept of inception and terminus. Inception is basically where you want a move to begin from, and terminus is your expected target, where you want to start taking profit, or where you want price to go before it either reverse or anything can happen. But inception is basically your point A, then your terminus is your point B. So coming to 9:30, my attention was narrowed down to the consequent encroachment of this fair value gap. Price is already trading above it, closing above it, using it as a form of support, and I'm expecting higher prices. So if it's to continue going to the upside, then at least it should trade to the upper portion of the fair value gap. You saw that the upper portion had not been traded to right here. So at least I want to see it trade to the upper portion. So between the consequent encroachment and the upper portion of this fair value gap, you can call this here your inception point A, and you can call this here your terminus. So you can frame a trade here on the lower time frame. Here on the 1 minute time frame are those levels from the 15-minute time frame. They are being transposed to the 1 minute time frame right here. So here is the other fair value gap. The first fair value gap we're looking at, here is it down here, and right here is the other sell side imbalance, buy side inefficiency on the 15-minute time frame. You can rewind the video to get a better context in case you are confused. All right, here was what I was looking at 9:30. Looking to my left on the 1 minute time frame, if you look at this high, you look at this high. If anyone was short around this level or around this level, where do you think they will put their stop loss? They'll put their stop loss above this high, because to a retail trader this is more like a protected high, because they saw that price came up here, started pushing to the downside, they call that resistance, and it came close to that high again, started pushing to the downside, so they call something like this resistance. So at 9:30 my best case scenario was actually what played out. I became more confident when I saw that even when this move was moving to the upside, this manipulation was happening at 9:30, and it was looking as though it was coming for this buy side liquidity. I wanted that buy side liquidity to be intact. Yeah, I wanted the buy side liquidity to be intact because it will be a nice place. I want to start taking profit if I engage anything here. So I wanted to be part of the move even before this buy side liquidity gets taken out. And if you observe, it's just the buy side liquidity resting below the terminus, which is the upper portion of the 15 minutes fair value gap we outlined. So why price started trading to the downside, all this movement to the downside, I was looking at it as manipulation. I was looking at this movement to the downside as manipulation. So while it was trading to the consequent encroachment of this fair value gap, I wanted to see support there. So the moment I saw this candle trading lower, I entered, I think around this level, just right here. You can see the entry right there. So I entered my position right there. If you observe, we have this little fair value gap on the 1 minute time frame, just like this. So, and the idea was that I don't want price to come lower to take out this low. That was the low on the 15-minute time frame. So that was more like our protected low from the 15-minute time frame. So if price is coming lower, I don't want it to come for this low. That was what gave me the confidence of entering something more like a tortoise soup entry here. Although I didn't get it from the lowest portion, it went up a little before I was able to participate in. So then I started aiming for this buy side liquidities. So it's just as simple as this. Reading price is just like telling a story. It has to flow. I hope you got value from this video. If you are new to the channel, I want to encourage you to subscribe. Hit the like button if you like this video and you want us to continue bringing out content like this. And then tell us what you think about the video in the comment section below. Thank you, and I'll see you in the next video.